Right, so I'm going to start now. Right, so I just like to put this little disclaimer in the beginning, just to cover myself, and because I'm copying people on YouTube who do the same thing, but it's probably not necessary. But just leave you that for you to read and pretend to read it. Right. Okay. So I'm looking at the people that are here now. I think some of you already have an investment in Bitcoin. So, but I would still try to balance it out between going advanced and keeping it fairly basic for anyone who's never invested before. So, just in case there's anyone here who hasn't invested or hasn't invested much in Bitcoin, one thing that people need to take into account if they're nervous about investing is the fact that Bitcoin has outperformed everything in the last 10 years. No matter what kind of investment you can think of, be it property or gold or stocks or Tesla or Apple or Amazon, none of them touch what Bitcoin has achieved in the last 10 years. Now, having said that, there's, or shall I say, in spite of that, lots of people are skeptical about Bitcoin. And this is in no small part due to what happened in 2017. So how I look at it is, I tend to say in 2017, the Bitcoin, the rise and popularity in Bitcoin was due to retail traders, people like us. At that point, the institutions weren't really playing a part. There may have been very rich individuals, but not institutions. The institutions have been coming in gradually. And one of the reasons it's taken a long time for the institutions to come in is, besides the skepticism, it's the environment in which to invest in Bitcoin wasn't there for them. Yeah, so if you think about it, the ecosystem wasn't mature enough. So even if they wanted to get involved, they literally couldn't, because you get so many financial regulations, etc. And yeah, there basically wasn't a way in. So what actually happened, actually before I jump to that part, so what actually happened is, as time went on, and I'm inclined to think in part because of COVID, the fragility of the financial system was exposed, because what was happening was, once the recession started, wealthy individuals and institutions were seeing that their money was either not performing that well, or literally they could see that because of the way the dollar is being printed, their investments were actually being devalued. So, and that started to make Bitcoin look more and more attractive. So, so especially when they started seeing the returns and the pattern. So in spite of Bitcoin's volatility, as I mentioned, year on year, it's been doing better and better. So I don't know if any of you here have heard of Michael Saylor. Hello.
No.
Oh yeah, hi. Yeah, I was wondering, has anyone here heard of Michael Saylor?
No, I've not, Albert.
No.
Right. Okay. If you look him up in YouTube, because he's turned into a kind of like, how shall I put it? He's turned into a Bitcoin evangelist. So like many other billionaires, I think he's actually a rocket scientist. So that's probably how he knows Elon Musk. So he was skeptical, and then in around March last year, he started to see the light. And he started investing in Bitcoin as an individual. He has a company called MicroStrategy, and because he could see there were potential problems coming on later in the year because of the dollar printing. He wanted to invest funds from the company into Bitcoin, but his organization had to jump through hoops in order to make that possible. And once they did that, there the balance books of his company, MicroStrategy, you know, they just, you know, they rocketed. I've forgotten by what percentage, but it was very good for their bank balance. So from that point, if you were to look him up in YouTube, you'll see that he's just like championing Bitcoin and telling his, what you might say, his billionaire buddies, you need to get in on this. And in actually, I think it was in either January or February this year, he actually held a conference where he was talking to billionaires and giving them the ins and outs of Bitcoin and giving them advice on the best way to get into it. Similar to what we're doing, but on a much grander scale. So just as individuals are very nervous about Bitcoin, you know, they tend to listen to the hype about it being unstable, etc. And, you know, and it is, because it's not a mature ecosystem. If you don't know anything about it, it's quite scary getting on board. So if you amplify that and imagine institutions who are seeing the profit, just like individuals, they want to get in, but they don't know where to start. So he's been like an ambassador for Bitcoin and talking to his buddies, one of them being Elon Musk. And, you know, it's strongly rumored, you know, I mean, there's been conversations with him and he kind of like, he doesn't say it verbally, but he strongly hints that, you know, the reason that Elon Musk openly invested in Bitcoin was because of his influence. Okay, so let me just go to the, by the way, does anyone have any questions at this stage?
No.
Cool, right, okay. Right, okay, so, and yeah, so the reason I've got this slide is kind of like to show the contrast between what kind of impacts you know, large institutions and billionaires can have on the price of Bitcoin. So the effect of JP Morgan in 2017 was to create doubt, and a lot of people say that they had quite an impact on the price of Bitcoin and had a lot to do with why the price went down so quickly in early 2018. On the flip side, where you had Elon Musk championing Bitcoin, it had the opposite effect. So just in case there's anyone here who doesn't know the terms, FOMO stands for fear of missing out, and FUD stands for fear, uncertainty, and doubt. And as a retail investor, it's, you know, something that we have to be mindful of, because the implications of losing our money is it's closer to our living expenses. So we have to be mindful not to be easily influenced by what's going on around us. Okay, so this is my own theory, but I think because you've got more powerful individuals getting in the ecosystem, and because they're able to buy so much more, you know, i.e. Elon Musk, you know, with the amount of Bitcoin that they're buying, I think that's part of the reason that the price is being pushed up. And, you know, the more people look into it, especially the largest institutions, if you think about it, when they want to buy Bitcoin, they're not aiming to buy, say, one by the end of 1 or 2 years or something like that. They want to buy thousands of them. You know, ideally they'd buy even more of them if they could get their hands on, if they can get their hands on it. The problem for them is, you know, before they even came into the picture, you know, it's a guesstimation, but broadly speaking, 8 million Bitcoin out of the 21 that would ever be created had already been created. So what you've got there, you've got large institutions trying to find a way to get their hands on the 18 million that's already in existence, and to get their hands on the remaining 3 million that's yet to be created. And just in case anyone doesn't know, the last Bitcoin is going to be created in 2014. So, you know, I'm sure all of us have heard 21 million, but this is the kind of thing that creates that demand. You know, they're literally fighting over small amounts of Bitcoin, you know, relative, you know, in their terms, you know, And, you know, I think that's one of the things that's pushing the price up. And going back to JP Morgan, my favorite nemesis, well, not my nemesis, but you know what I mean. I'm not a big fan of them. So yeah, you know, it's like I said, I think they had a lot to do with the drop in price, and you know, lots of people within the Bitcoin space believe they manipulated the market to get people to sell their Bitcoin to drop the value, and then they basically just hoovered up to get better value on it. And what they're doing now is they're, you know, it's strongly rumored that they're going to be offering Bitcoin services to their wealthy investors. Okay. Right. Okay. This is basically showing where we are. So when people say, is it too late to get into Bitcoin? It's far from it, you know, and, you know, people say that the stage that we're at, we're still in the early adopter stage. So not even the early majority stage. So volatile as it is, that's where the opportunity is, you know. So the volatility, if you know what you're doing, is actually your friend, because that's where maximum profit is there to be made. When it gets to the point where it stabilizes or it's majorly adopted, the opportunity to make money, it would still be there, but it wouldn't be nearly as fruitful as it is now. Okay, and before I jump ahead, does anyone have any questions at this stage?
No.
Okay, cool. Right, 1 second. Right, so this thing here is what they call the trader's cheat sheet. And what it does, if anyone here has listened to Crypto Picasso within the Academy, he's always showing this sheet here. And he talks about the fact that the price pattern is determined by people's emotions. When people are feeling positive, that's when they generally buy. When they're feeling negative, that's when they're most likely to sell. So based on the emotional cycle, that has a strong impact on the price of Bitcoin or any other asset. And you know, he's of the opinion that we are somewhere in the hope optimum phase of the bull market. So we still have a long way to go. So yes. So that's basically where we are at the moment. So yeah, so when people say that, is it too late to get into Bitcoin? I'd say the answer is no. It doesn't mean that you should buy with emotion though, because generally speaking, I always say, this is my own personal strategy. I don't buy on a rising market. And if I do buy, I always buy when there's a blip where there's a bit of a dip, and then I'll buy some Bitcoin or whatever it is that I'm buying. So, you know, the common phrase being buy the dip. Another common misconception is so many people think that because one Bitcoin, what is it at the moment? It's probably about £40,000 at the moment. Because one Bitcoin is so expensive, it's too late. How can I possibly get into it? And my answer to that is, you know, as long as you have a stake, that's all that matters. Because one Bitcoin is divided into, I think it's what is that? I think that's 100 million Satoshi. So it doesn't matter what your budget is. You can start with 10 pounds. That's all you need. As long as you have a stake in it. And the second thing I'd say, as long as you're patient, that's all that really matters. So yeah, you should never see the price of a Bitcoin as a barrier to getting into the ecosystem. Right. So this comes to those of us who are down the trading side of cryptocurrencies. It's a hard truth, but you know, the statistics say 90% of traders lose their money. So the question, you know, so once you see something like that, it's scary. Then you think, okay, what can I do about that? How do I make sure that I'm not one of that 90%? So if you look at yourself in the mirror, and I've been guilty of myself in the early days when I first got into cryptocurrency, I had an ego. I thought I'm special. Yes, well, yeah, I know 90% lose, but that won't be me. I know what I'm doing. I'm the exception to the rule, and it just, the quicker you get rid of your ego, the better. The same applies to impatience. If you go into it thinking that you're going to make money fast, that's a good way of guaranteeing that you're going to lose your money. And one interesting thing is, when you're going into it, it's very important. It's a common cliche, a common saying: don't invest what you can't afford to lose. But there's meaning behind that, because if you invest money that you depend on for your living expenses, that's going to affect your decision making process. If you depend on the money that you're investing, you're not going to be patient. You're going to be rash in something that you do. So it's very important to go in at a level that's comfortable for your financial situation at that point in time. It takes away so much stress, and I'm speaking from experience. You just go in small, learn the ropes, and then you can gradually phase in once you get more experienced and you know what you're doing. Hence why I've mentioned inexperience as well. So, and it's a funny thing, because linked with that is, I'm pretty sure that most of us get into cryptocurrency because we think, wow, we're going to make some money, we're going to be rich. Now, if you have a short-term vision, once you realize that it's not so easy, that's why in 2017, when there was a retail-led bull market, so many people left because they felt disillusioned. It was taking too long for them to get their profits, and those that didn't do the research, felt, I'm on a losing game. Let me get out, try and minimize their loss. And I'm sure you can guarantee that those that left in 2017, 2018, they regret it now. Patience is so important. But once you make yourself knowledgeable within the market, then you can see the bigger picture, and that gives you the ability to that helps give you the ability to be patient and stay the course, because you're looking at the big picture. And along with that, I think of it in terms of monopoly. So if you don't have the what you might call a mature investor's brain, you're thinking in terms of, how much can I make now? How much can I make in a couple of months? How much can I maybe even make in 6 months? But that's not the game the institutions are playing. The institutions are coming in to hold it, because obviously they've been playing the financial game much longer than us. They're gurus, whereas we are still learning, and they have an understanding of the big picture. So when they buy it, they're buying to keep it. They're buying to use it as an asset to make even more money. It's a little bit like how, say, for example, when a bank has money, it doesn't let that money sit there. What does it do? It invests it. It used that money to give loans to people to buy houses. It uses that money to put into the foreign exchange market. That money is never idle. And the larger institutions are looking at Bitcoin and thinking long term in terms of what they can do for it. On another level, for example, you've got pension funds, for example. They want to get into cryptocurrency, but they can't do it unless the playing field is made safe for them. So, and that's one of the reasons why large institutions have taken so long to get into cryptocurrency. The environment has to be made safe enough for them to be able to do it. The environment has to be made safe enough for them to be able to say, pension funds and large funds for wealthy individuals, they have to make it safe enough for them to invest, knowing that they're going to be okay. So to give you an example, if you think about, some of you will have heard of Coinbase. So the way Coinbase is set up for institutions isn't the same way that it's set up for us. They're able to, for example, set up an account in a way that their crypto is kept in cold storage in highly fortified locations. Whereas for the individual, and I could go into that another time, but for the individual, when we have our Bitcoin on Coinbase and Coinbase Pro, although it's a large institution, and broadly speaking, it's safe, it's not guaranteed in the same way, if you see what I mean. So, there's different types of risk for the individual, and there's different types of risk for institutions, but they won't go in big unless they know that it's a perfectly safe environment for them, so that they can then offer services, like I said, to pension funds and things like that. So I think people like us have to have a set, think twice when we think, okay, what are we in it to make quick returns, or are we thinking of the long game, or are we thinking of it in terms of a combination of the two? I think it's very important, because the time will come when it would get more and more difficult to get your hands on actual Bitcoin. And so yeah, I think it's very important to bear that in mind. Any questions at this stage, by the way?
Well,
Not for me. Keep going.
Okay, cool. Right. So bearing that in mind, so when I said about long-term versus mid-term versus short-term, that there's different ways that we can consider of how to invest in Bitcoin, and different people might say, okay, I'm going to invest 100% in Bitcoin within crypto, because not everyone invests everything into crypto. Some people invest in traditional stocks, etc. So within your crypto portfolio, what is your risk tolerance? And you kind of have to look yourself in the mirror and say, what can my stress level take? If I'm not very risk tolerant, then I'm going to probably say, okay, 100% of my crypto investment is going to go into Bitcoin and potentially Ethereum. If I am prepared to take a bigger risk, maybe that percentage would go down from 100% to maybe 80%, 75%, 60%, 50%. There are some people that have, that they're risk tolerant to a higher degree than the average individual. And with some of them, they actually have no Bitcoin. They only have other cryptocurrencies, or they have Bitcoin as a minor share of the proportion that they have. So, you have, as an individual, have to, look, like I said, look at yourself in the mirror and say, okay, what's my risk tolerance? And based on that, you then go in and make your decision on what kind of investor you're going to be. So based on that, I've made a kind of chart. So you have different levels. So you've got someone who might say, you know what, I'm not that sure about Bitcoin, but it's on the up at the moment. So I might put a little bit in it, but I'm going to take my money out quickly because I don't quite trust it. So to someone like that, I say, okay, put some in, keep an eye on the price every now and then. When it doubles, take your money out. 100% profit is better than nothing. You've got the next level. They want to place, they trust it, but they still want to play safe. So they might just buy some Bitcoin, and they literally forget it. They've got some money set aside. Let's just say they've got, I don't know, £500. That's the entirety of their investment budget. They just put it all in. They're not concerned about the price. They know that in 1 or 2 years or longer, they're gonna, make a good return on their investment. You've got the next level, and it's the following levels is closer to me. Actually, no. So the second level, buy it and forget it. That was what I did when I first started, but it wasn't a good strategy and it didn't work out for me, because although I put in, relatively speaking, a lot of money for my situation at the time, I was quite panicky because I didn't quite understand, what I was putting my money into. After that, I educated myself and I went down the route of dollar cost averaging. So instead of putting a big chunk in, if my investment was, £500, rather than putting that money in one go, I would spread it over a period of months. And it has two things. It does two things. Although the price will go up sometimes, because you haven't spent your whole investment, it gives you the ability to take advantage when the price goes down. So just to give you an example, depending on how long you've been in the ecosystem, 2017, it went up to just under $20,000. Between that time and early last year, 2020, it was going down. Sometimes it would go up, but as early as last year, March, it was down to about, I forgot what that was in dollars, but about £3,500. It's just, so if I had spent all of my budget during that period, I wouldn't have been able to take advantage when the price dipped in March last year. So yeah, so it's good to dollar cost average. The next level is to dollar cost average, but not just with Bitcoin, but to use the same strategy with the altcoins as well. So this is going deeper into it. And I've noticed that a lot of people deal in Bitcoin in terms of their local currency. They always fit, or altcoins in their local currency. Cardano is worth £1.20 or something like that. Since 2018, I actually stopped thinking in terms of pounds or dollars. And I always look at Bitcoin as the gold standard within crypto. So I always think in terms of Bitcoin, because what I found is that you might find that the price of an altcoin looks okay, but then relative to Bitcoin, it's actually not doing that well. And if that cryptocurrency had been traded against Bitcoin as the main trading pair, I would have got more of that altcoin. So what I tend to do is I work in cycles. So if I'm buying an altcoin, I will look at the best deal in both Bitcoin and pounds. And whichever's the best deal, that's how I will buy the altcoin during that period of time. And then what I do is I watch that altcoin, because, as if you're in it already, you will know that when the price goes down for an altcoin relative to Bitcoin, it goes down a lot more percentage-wise. But then when the tables are turned, when it goes up, it shoots up a lot higher relative to Bitcoin. And at that point, that's when I would trade that altcoin for Bitcoin to increase the amount of Bitcoin that I have. So that's generally how I work. Every now and then I would deal with pound sterling, but the bulk of the time I'm trading altcoin pairs with Bitcoin rather than altcoin pairs with pound sterling. Has anyone got any questions at this stage, by the way?
No.
Cool. And then the next stage, and it's kind of what prompted me to do this thing today. It's those of you that are within I Am Academy will know about this coin that was released called SafeHound, and it's basically a new coin. It was released a couple of days ago, but because it's a new coin, it's not in the normal places that you would buy a cryptocurrency. It's not on Coinbase, it's not on Binance. It's in a completely different area. And the only way to get it, you can't get it without a certain amount of technical knowledge. And I've been avoiding that for a long time because I thought, oh, well, I can't be bothered to learn that. So I'm not touching those coins. But because it was such an opportunity, I thought, no, I have to find a way to get my hands on it. And there was a big gap in my knowledge. And although it's a gamble, relatively speaking, I basically invested money from profit I'd made with other altcoins, and I went into it with that. But it's kind of like, it's a reminder that it kind of goes back to the thing about, is it too late to get into Bitcoin? Yeah, psychologically, I can see the argument for that, because one, Bitcoin is too expensive. But, well, I say too expensive. It's expensive. It's not too expensive historically, because we're pretty confident that Bitcoin is going to go a lot higher than it is now. But there's that psychological thing about having a nice round number. So that being the case, there's so many levels within the crypto ecosystem. So you've got what you would call, the blue chip coins, Bitcoin and Ethereum. Then you've got the mid cap coins, and then you have the low cap coins, which is basically what this one was this week. It's brand new. The value is really tiny. It's extremely high risk, but then the potential profits are extremely high as well. So it goes back down to what kind of strategy are you using. If you have your safe stuff which you don't touch, and then you have the stuff that you play around with, and if you manage your risk carefully, you have the potential to make really amazing profits with a certain percentage of your portfolio. So because of that, I've decided to take this side of things different. So just for those of you that don't know that much about this level of the crypto, the crypto ecosystem, you have what's called staking. Staking is basically, you are your own bank. You have a cryptocurrency, and if you don't trade it, but rather you stake it, you actually earn interest on it. So by keeping it in a fixed location, every week, every month, every year, depending on the parameters for that coin, more of that coin are created, and then you add it to whatever your stake is, and you keep building on that, and then you have a compound effect. So that's what staking is. Decentralized finance is kind of similar, but one of the key differentiators is the fact that the cryptocurrency is not held by the exchange. It's not held by Coinbase. It's not held by Binance. And as I mentioned before, although they might be large exchanges and they might be kind of safe, while they have that cryptocurrency, in the strictest sense of the word, that cryptocurrency doesn't belong to you, because if they get hacked, because you don't have what's called your secret keys, you would lose access to that. So that's one of the risks of the what you would call the centralized exchanges. Whereas DeFi, you're doing your trading in a decentralized location, which means that you control it, but then you have a different kind of risk, because if you forget your passwords, etc., then there's no way to retrieve it. And then if I just quickly mention NFTs, which stands for non-fungible tokens, this is an area that is expected to explode. And depending on how close you follow the news, you've now got games and sports teams creating non-fungible tokens. And basically what it is creating a digitized art, digitized short film clips, things like that. And they're the single instance of that, or there may only be, for example, 10, 100, 1,000 copies of it. Because it's in the crypto space, it cannot be copied in the same way that music can be copied. And that's one of the things that creates value for people that are interested in that kind of asset. Any questions about that, by the way?
No.
Okay, cool. Did you have a question, Naveed? I've seen that you've unmuted your microphone.
No. I'm all right.
Okay, cool. Okay, so bearing that in mind, 1 second, need to clear my throat. So bearing all of that in mind, once you once you begin to get the hang of things, and once you put yourself in a place where you're, you know, willing, able to learn how things work, the volatility of the crypto ecosystem is actually your friend. That's why you're able to make more money than anywhere else. The key is getting the skill set that lets you, you know, use it to your advantage. And, you know, I kind of went over it earlier in terms of use dollar cost averaging to build your portfolio. And you use it not just for buying, but also for selling. So I'll give you an example of that. So remind me to go back to explain what stable coins, if anyone doesn't know what they are. Let me just find that. Okay, so to give you an example, okay, so some of you would have heard of Dogecoin. And this is, oh, actually, also feel free to let me send you some links, because I use something called Cointracking. I use something called Cointracking. And what it does, it automates the monitoring of my crypto assets. So any trade that I make on any exchange is automatically updated to this, and I can see what I've been doing over time. So it's a good way of keeping a handle on things. And what I mean by dollar cost averaging when I'm selling is, if you look to the right of the image, this is Dogecoin. So I've had it for a while, and through time, as I said about buying and selling a coin relative to Bitcoin to increase, to go back and forth, increase the amount of the crypto I have and increase the amount of Bitcoin I've got. So when Dogecoin was shooting up in price over the last couple of months, if I wasn't using the dollar cost averaging mindset, if you look here, I've sold it. Okay, that first one on that hill, I don't think I really made anything on that. But if you look at 1, 2, 3, the last 4 times I sold Dogecoin, if I wasn't thinking with a dollar cost averaging mindset, I would have sold all of my Dogecoin at that second point, and I would have missed out here. Can you not see my mouse, by the way? I'm not sure. I would have missed out on the last 3. So although on one level you can say, oh, damn, what if I'd had all of it and just sold at this high point? That you can never know. No one knows the market that well. It's impossible to predict what's going to happen. So if you have a dollar cost averaging mindset in terms of, okay, so what I tend to do is I might sell, I don't know, 1/4 or 1/5 of that particular coin. So although I wouldn't be making maximum profit, if there's enough opportunity, I've still got skin in the game and I can sell a bit more. So yeah, so that's basically what I do. Dollar cost averaging both up and down. And this is my this is basically my Bitcoin journey as well. So the reds and the greens, they're slightly deceptive, but it's basically showing me buying and selling Bitcoin with various cryptocurrencies. So that's me basically going in and out of Bitcoin with various altcoins to increase my stake of Bitcoin. So that's so all of those marks are showing my journey. Again, all of that's on the site that I'm registered with, which is called Cointracking. Anyone got any questions at this stage?
No.
Okay, cool. And yeah, so right, so why am I talking about Amey Academy now? So this one will probably be for your benefit, Naveed. So basically, it's kind of going back to the ego thing. I had to be brutally honest with myself, and I realized that, I made really, what I'd call silly mistakes now when I first got into crypto. So I said, okay, I'm not a skilled trader. I'm gonna take it easy, and I'm going to invest. So I learned to invest. I learned to be patient. I accepted that I didn't have the skill set to be a trader, and that's why when Amey Academy came along, I thought, okay, I know where my weakness is. If I can be in an environment where I'm going to learn to improve my trading, then yes, I'm definitely going to take advantage of that. And that's why I came into IM. So sorry for those who are already members, but yeah. So within IM, you have the crypto space, you have the forex space, you have the binary trading space, and you have the e-commerce space. So what I'm doing at the moment, I'm capitalizing on the skills of people who know a lot more about crypto than I do. They help improve my trading strategy. They help improve my strategy in terms of what coins to focus on and when to buy them. So this is basically showing some of the educators. So for the benefit of anyone who's not with DCX, I just highlight a couple of them. Okay, so you've got, okay, so if I go for the three or four I'd focus on is Curtis Cobain. He just, he really researches coins, and yeah, the advice that he gives is amazing. And when you listen to advice and buy the coins when he suggests, then yeah, his track record is just amazing. If you look at the bottom right, you've got Ivan Paychecks. If you were to Google him, you would see that he was the very first person to buy a luxury property using Bitcoin many years ago. And then you've got the next one across, you've got Crypto Picasso. He's kind of like the Bitcoin guru. He doesn't talk about any other coin. He just focuses on Bitcoin, and he's great in terms of if I want to buy or sell Bitcoin, the advice that he gives within the platform is a good guide in terms of when I should buy a bit, when I should sell a bit. And then the last one is the Ripple XRP guru. So yeah, so that's kind of like a quick summary of some of the people that are guiding me on my crypto adventure. Yeah, so this is the first one, Kurt, and yeah, this is Crypto Picasso. Yeah, okay. So yeah, I think because most of you know the academy, I'm kind of going to skip that and give you a chance to, if anyone has any questions, they can ask away.
Albert, are you going to cover anything on SafeHand on how to buy it?
So can you say that again?
Are you going to cover anything on how to buy SafeHand?
Oh, right. Okay. Yes. Well, yes, I can. I'm a novice with that, but I can kind of show you how to buy using DeFi now. So it would be a slow tutorial, but yeah, I kind of know my way around now. So yeah. So even if I hadn't been able to get it, I actually made a point of studying how to do it so that in future I know how to navigate my way around the DeFi space. Oh, someone's asked a question in chat. Let me just see what that says. Sorry. That's a good evening. Oh yeah, hi Rich, good evening. Yeah, a late reply. Yeah, okay. Yeah, I don't want to keep you lot too long. Does anyone else have any other questions or? But Jay, yeah. So if you need help on that, then yeah, just reach out to me, and then I'll show you the different steps on how to buy it. Yeah.
Thanks.
No problem. Anyone?
Albert.
Else? Yeah, who's that? Sorry.
It's Cheryl.
Oh, hi Cheryl. Oh, when did you?
Hello. A little while ago.
Oh right. Okay. Yeah. How you doing?
All right.
Yeah, not bad.
Not too bad, thank you. Wanted to ask about non-fungible tokens again.
Right. Okay.
And what that means again. Sorry, it's out my head.
Okay, so I'd say if you think of I think one I could relate. If you imagine someone who's a stamp collector, or maybe when you get kids who, in the old days, they used to collect football cards.
Oh yeah.
Or maybe Pokemon even. Yeah, Pokemon. People who collect Pokemon. So imagine these football cards, but instead of being mass produced that you can get in any sweet shop, there would only be 100 of them. So
right.
A bit like with Bitcoin, it creates supply and demand. And what's been happening with NFTs is that people have been making silly money with it already. So some of them have literally been exchanging hands for thousands of dollars. I kid you not.
Wow.
So, and what's happening more? So this is the early days. So I think it was this week, Eminem released some NFTs,
Oh yeah, I heard about that.
Yeah, so you're going to get more and more. You're going to get, artists, so whatever it is that you're a fan of, whether it be music or sport or whatever, you're going to get people are going to be releasing their own NFTs. And the more in demand that person is, and the more limited the supply, that's going to create the the demand and start raising the price of those items.
Yeah.
Yeah.
How is that sold though? In what format? Just coins? It's just tokens, same thing, but sort of high demand.
They would sell it for Bitcoin or whatever cryptocurrency they want. And Julian has just said that some of them sell for millions. yeah, some of them sell for millions. Yeah, so it's crazy. So yeah, so it goes back to what I said again. It's Bitcoin is just the tip of a giant iceberg, and there's so much opportunity to make money. But going back, okay, I'm going to say it to you. Going back to the IM Academy. If you're not plugged in, you won't be aware of what's going on. So it's kind of like this SafeHound was a lesson to me. And I thought, you know what? I've known about DeFi for probably at least 2 years, and I couldn't be bothered. And had I gone into it, it's not guaranteed, but I would have had a much stronger chance of getting those coins when I wanted to. You see what I mean? So
yeah.
I have a saying, knowledge isn't power. The application of knowledge is power. That's what I always say. If you know something and you don't apply that's not power. Power is applying that knowledge.
So true. Yeah. Totally agree.
Yeah.
Thank you.
That's okay. No problem. Anyone else got a question or? Speak now, forever hold your silence. Okay, right. Okay, so if no one's got any questions, I don't want to take up too much more time of your evening. So thanks for attending, by the way. Yeah.
Thank you.
Yeah, I'm not as structured as I could be. I keep saying I'm going to hold a meeting every week or something, but I never do it. But yeah, if any of you are interested and you want me to focus on a particular thing, I can maybe make that the theme of my next meeting. Feel free to twist my arm and make me do more if that's what you want, and then I can do that. Yeah. Okay, so have a good evening, everyone.
You too, Albert. Thanks very much.
Thanks,
Thanks,
Albert.
Thank you.
Thank you. Bye.
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 Take care. Bye.